Hello, and welcome to SecureTalk, a podcast where we explore the critical world of information security innovation and compliance. I'm your host, Justin Beals, founder and CEO of StrikeGraph. Together with our expert guests, we'll provide you tools and tips to help your business thrive in the rapidly evolving cybersecurity environment. Hello, everyone, and welcome back to SecureTalk. I'm Justin Beals, your host. As many of you know, I'm the CEO and founder of a venture capital-backed company, StrikeGraph. I've spent most of my career developing new initiatives, new products, and definitely many new companies, usually as a chief technology officer, VP of engineering, or some sort of product lead. But early on in my career, I actually held the role of a CEO for a number of startups that I was building. Now, most of the time, when we talk about founders and startups, we think about the most celebrated events, which is generally fundraising with venture capital-backed companies in Silicon Valley. But early in my career, I didn't have access to capital. One of the reasons was geography. I founded my early companies from 96 to 2002 in Atlanta, Georgia. And it wasn't as available as we saw in Silicon Valley, Seattle, Los Angeles, and New York. Secondly, I have a theater degree, which isn't the most confidence-inspiring degree for business folks to make investments in early-stage startups. So many of my early stage startups that I founded were bootstrapped. We built them without capital. And we had some really good success. And there's a certain way of looking at a bootstrapped company and the ownership stake that you're able to carry with it and the freedom of decision making that you have. But also, it's very hard to build a true technology product, enterprise grade, without capital to get it off the ground, because it takes a team of engineers, of sales leaders, of customer success and support to really get the engine rolling. Well, about 6 or 7 years ago, I wanted to take the CEO journey again, but I wanted a new experience. I wanted that experience to be a venture capital-backed experience. I wanted to work with a board and a group of investors that had experience in how to develop these businesses, as it was both a career opportunity for me and an exciting way to build powerful product and bring it to market. Today, on SecureTalk, we're going to talk to a venture capitalist that specializes in the security space. And so I'm really glad to introduce Rey Kirton. Now, Rey Kirton has a diverse work experience, primarily in the fields of venture capital and consulting. He's currently serving as the vice president for Forgepoint Capital. And Forgepoint Capital is one of the best venture capital groups that I've met in the security space, and they have a deep expertise there. Now, prior to joining Forgepoint, he interned at Harlem Capital, an investor in minority and women-owned startups. And before his time at Harlem Capital, he worked for Altman Valandry and Company, a technology-focused strategy consulting firm. During his tenure at Altman Valandry and Company, he managed over 30 operational and market due diligence efforts for investor and corporate clients across the US, Europe, and Latin America. Rey began his career at Cambridge Associates, where he provided capital markets research and portfolio allocation advice to private and institutional investor clients with assets ranging from $50 million to $3 billion. He is a CFA charter holder and holds an MBA from the Wharton School of the University of Pennsylvania, as well as a BA in economics from Harvard University. It's certainly great to talk to Rey. He has a deep perspective on building companies in the security space broadly, and also what major trends are affecting our space and the types of companies that we might build. I hope you all will join me in welcoming Rey to SecureTalk today. Hello, everyone, and welcome back to SecureTalk. This is your host, Justin Beals. Glad to be recording another episode for us this week. I have a great guest, a little bit of a new perspective on the security industry broadly. We have a venture capital investor joining us today, Rey Kirton from Forgepoint Capital. Rey, thank you for joining us today. I really appreciate it.
Of course, no problem.
Excellent. You know, Rey, we've talked to a lot of folks that do security, certainly some founders that have built companies in the space, folks that have been deep experts on everything from national policy to how to build the best secure operations center. I think your perspective is going to be a little unique. And certainly in my journey in building StrikeGraph, I've worked a lot with investors in developing the business and built some amazing partnerships and friendships along the way as well. It wasn't the hellscape I was always led to believe. So I'm really grateful for that. Rey, we always really kind of love to learn how people came into the career, their expertise that they're in right now. You know, give us a little bit of the origin story. How did you get involved in this kind of work?
Yeah, so I actually started my career on the LP side at Cambridge Associates, so evaluating asset managers and venture capital firms. Then went over to consulting, where I was doing due diligence for private equity clients. We were focused on TMT, so broader than cyber, but I did work on a few cyber deals, and we were kind of like mercenaries. We would go into the weeds, ramp up on a complex topic for 4 weeks, deliver something to the private equity team, and then hand it over and move on to something else. And I really enjoyed the learning element, like ramping up on technologies I knew nothing about. And so working on things in TMT, including cybersecurity, got me a little bit interested there. But I wanted to move over to venture capital because I really liked working with those management teams and learning about these sectors. But I also wanted the relationship to be longer term. So in consulting, the work comes to you and then you work on it and you pass it on. In venture, you do a lot of the pre-work. So looking at what sectors are most interesting to you. And then you work with the company to actually make the investment. But then post-investment is when the real work actually begins. So you're really building these 7-year to 10-year relationships, which I thought would be a lot more meaningful. So that's why I decided to transition into venture capital.
Oh, that's excellent. So were you always interested in business or did you find it in college? Because this is definitely it seems to me you're interested in companies and how they're working and how the good ones and the bad ones and everyone in between. Yeah.
In college, I couldn't say. So I studied economics, but I was probably more focused on playing football in college than I was on exactly what I was going to do post-college. So after graduating with a degree in economics, finance just seemed like a natural progression. But I think my favorite part of working with companies is just problem solving. It's constantly solving all these different types of problems, which I think is really interesting. And so put that together with just kind of a basic knowledge of finance, and I think venture capital is pretty interesting.
Yeah, certainly it's a nonstop myriad of different issues. When trying to build a company, when you were doing actually, before I dig into the next question, can you define TMT for me? I hadn't heard that acronym before.
Yes, technology, media, and telecommunications.
Okay, so that was the sector of analysis you were doing in the consulting work, right?
Exactly.
Yeah. So you got to see all different types of companies, media production companies through to cybersecurity specifically. Yep. Yeah.
And also worked on a lot of fiber acquisition deals. So it was a wide gamut. I actually, when I started working in TMT, I thought, maybe this would be too narrow. And it was not at all. And then I went even more narrow into cybersecurity and thought, okay, this is going to be too narrow. But again, once you dive into it, everything's way more broad than you expect.
All right, I have to ask one more question because I know I'm going to get asked, where'd you play football?
Harvard University.
Oh, yeah, that's excellent. Yeah, that's great. I did a little intramural soccer in college. That
Oh,
was
nice.
about the limit of my.
There you go.
Yeah.
It's something.
Good. Well, Forgepoint, especially, I know as being deeply interested in security as a theme, right? Was that part of one of the things you were excited about in working with the team?
Yeah, I think so. So I actually first met the team when I was in business school, and I was working with a group, and we had basically to look at a topic and find startups in the space and kind of pitch the space. So our topic was the future of mobility, and so we decided to do security for autonomous vehicles. And so spoke to a bunch of folks in the space, which ends up mostly being, IoT security. Came out here and pitched to a handful of VC firms, one of which was Forgepoint. And so that was the first time I got introduced. Then afterwards, I interned with Forgepoint over the summer, dove a little bit into data security. But the thing that really got me interested in Forgepoint was the team. I think they're very collaborative. Everything's by consensus. I know there are some teams where you have partners that kind of spearhead the deal and like they kind of take it upon themselves. Whereas Forgepoint was like, the culture of collaboration was pretty important. And I thought that was more reflective of consulting, which was my background. So, I felt like I fit right in. And I had a little bit of knowledge of cybersecurity, but obviously a lot of room to grow. And the people on the Forgepoint team were very happy to teach. So that works well for me as well.
A lot of different types of venture capital firms. Obviously, it seems like broadly their idea is to put $1 in and get more of those out the other side. It's investment,
Yes.
Right? Yeah. But I've also noticed that a lot of different VCs have either thematic approaches or different ways that they consider, what they're investing in. How does Forgepoint, create a thesis on the investments that you want to do?
That's a good question. I would say it probably varies a little bit amongst our team. One of the things I've been working on at Forgepoint since I started, one was to build out a taxonomy of everything that we invested in our space. So we do cybersecurity and some software infrastructure. So kind of the convergence of infrastructure and security. And so mapping out all the spaces that we actually look in, and then we kind of pinpoint which spaces we think are most interesting. We also have a database of all the companies that we can look at, so we can kind of filter those down to investments or companies that we think are in our sweet spot. So we do Series A, Series B investing, so you can kind of proxy which companies are the right size for us to look at. And so by taking those two crosscuts, you end up with a much smaller universe. And then when it comes to really diving into specific areas for thesis-driven investing, we rely a lot on our network. So we have a pretty big advisory council of CISOs that we try to stay pretty engaged with. So by speaking to them, one thing we started doing this summer is building reports called Forgepoint Forward, which will start coming out before sometime in Q4 this year. But essentially, it's like tackling a specific topic that has a lot of buzz and diving into that topic by talking to the entrepreneurs, CISOs, and other folks in the space to really get at like what's interesting and what's not. So we're doing one with ASPM, one with AI governance, one with AI at the edge. So those will be the first three that we release. Oh, and one with security log data management. And then lastly, I think being in VC, you get access to a lot of entrepreneurs. And so just talking to as many entrepreneurs as possible, I think, is another way to actually help you brainstorm and build up a thesis. Because the entrepreneurs they're like industry experts. So by talking to a bunch of experts that have unique perspectives of how the market can be disrupted, and then comparing that to what you're hearing from CISOs at major banks or Fortune 500 companies, everything kind of comes together, and you get some interesting outcomes.
Yeah, it's interesting. My experience as a founder has typically, especially for a venture capital backed business, has usually been as like a chief technology officer. So I don't do as much. I hadn't done as much of the the front end engagement with investors
Yeah.
as a CEO might. And then prior to that, when I was a CEO, we did bootstrap for all the businesses. So, we didn't necessarily take in outside investment. But I would have been shocked at how much outreach that I have. I have a mini CRM for all y'all, track everything. Yeah. But I also love the conversations. I've just been very open door about, hey, if we want to chat, let's chat. Let's see how it's going. Yeah.
And we definitely appreciate that. I mean, I know it can be, the waters can be a little bit muddied from outreach, especially if, you get outreach from somebody that maybe doesn't necessarily know the company or it doesn't really match with the company they're reaching out to. But candidly, I think a lot of us that are doing that cold outbound, oftentimes it's, with all sincerity and we're prepared and the conversations are really interesting. So,
I do, I don't think I've had a negative call in my experience,
I will say that I think the market is getting more. So if you think about competitive dynamics for venture capital, if you think about maybe, 15, 20 years ago where there weren't as many venture capital firms. And so it was all kind of warm relationship based. And I feel like there was probably less of this, being contacted by multiple firms for intro conversations. But really from a venture capital standpoint, as the market gets really efficient, right, the only way to remain competitive is, well, one, obviously to add a lot of value to your portfolio and having a network to get these warm introductions. But on the flip side, if you don't have those warm intros at the moment, being able to know who's out there and reaching out and having these conversations is really a way to stay up to date on the market.
Yeah. It's interesting. I sat in a CEO summit with one of our investor teams last week. They talked a lot about verticalization strategies and kind of letting go of the single technology in a completely horizontal play. Seems like y'all have focused on that in some way, that a verticalization strategy has helped y'all in that focus, and maybe from a competitive perspective.
I think so. We like to say that we provide a lot of value outside of just capital. At least that's our goal.
Yeah.
And it's really hard to build up the deep, meaningful networks and expertise when you're doing things that are unrelated. So, we like to think that the pattern recognition gives us a bit of a leg up. Our networks and the ability to introduce customers or recruit executives or anything like that adds a little bit more value and just makes us a little bit better of a partner than someone else. But, obviously it's always on a case by case basis.
I have to say that, I do get asked nowadays, because I've been through a couple rounds, although I'm not the deepest expert. There are other people that are much more experienced than me, but they're like, what do you look for when you talk to an investor? And the one thing that always stands out to me is when they introduce me to a potential customer. I'm like, they get what I'm trying to solve right now, which is as many deals as possible. Yeah.
I think there's perfect alignment. You want to sell more deals. We want you to sell more deals. So
yeah, it works good.
That's always a good fit. Yeah.
That's exceptional. So let's dig into a little bit of this pattern matching that you guys are seeing. Certainly, like as a founder, and I feel a little intrinsically driven these days by this work of building companies. I certainly enjoy it. I'm always drawn by an analysis of the problems that need solving, right? That's actually how the current business got founded, is like, I had this problem, I needed to solve it. I saw it in a lot of other people around me going for the same problem. And I said, hey, this seems like the type of problem that is a venture capital backable business. Like, we could build that. What's the problem space feel like for you right now, Ray, and perhaps how Forgepoint is thinking about it?
Oh, that's a good question. I mean, I think a common theme is just handling volume of alerts, of logs, of just data. Data just continues to grow more and more, which on one hand is a good thing, because the more data you have, the better decisions you can make. You can throw it at AI. You can do a lot of different things. But in reality, a lot of folks' data infrastructure just isn't set up to handle that much data to effectively get information from the data and drive better results.
Yeah.
And so anything around there, partially why we looked at kind of managing security log data and the spaces like the Cribbles of the world and the Sims and everyone else kind of playing in that data storage and processing space. I think that's going to be a pretty important problem, and it's pretty ubiquitous. And then even as you move into some of the adjacent categories like ASPM, which, has become a very crowded market, but everyone's trying to tackle the problem of, hey, we're getting all these alerts. We have all this information. How do we triage? How do we make it so that this is all actionable and efficient, right? And so I think that's a major problem space that it kind of touches a lot of subcategories within cyber, but is kind of a common theme.
Yeah. I think a lot in our work about the security posture, right? Like what's my surface area that I'm trying to protect? And one of the things that I'm constantly floored by is how big it keeps getting. To your point about the amount of data and alerts that we're getting in, it's like you had a third-party risk, situation in, and all of a sudden you're worried about the security of your vendors. That's a whole nother company, right?
Right. Exactly.
And certainly, I worked at British Telecom a long time ago in the Network Operations Center, and it was much more manageable. We were 24/7, 365, but an alert would come off and we'd get a flood of data, but we could pretty easily narrow it down. Like it's Frankfurt, London, something is going on here. Yeah. But man, if I were to just take random logs from a web application interface and try and understand what was happening, that would be very difficult.
Yes. Yeah. So I think it's a problem that's been around for a long time. I think there's a lot of solutions that are making it more manageable, and companies have gotten a lot of success.
Yeah.
But it's almost, it's kind of the symptom versus like the disease. And not sure if anyone's really been able to cleanly tackle the disease yet, the thing that's causing all of this. But, it's a challenging problem, which is, why we're in the business.
Yeah. And of course, it's never efficient to just throw bodies over the long term at the problem. And that's what we were doing, is just analyst after analyst after analyst. But they need help too. They can't handle, and gosh, it's mind-numbing work to be like, this is another false positive, false negative, another false positive, false negative. Yeah.
Which is, anything that's mind-numbing always is I feel like is a ripe opportunity for AI, right? So
good. Yeah.
Anything that's just like, geez, I don't want to do this. So we do think that AI will start, starting small, because obviously there's the element of trust for AI that takes a long time to build up. But by chipping away at the low-hanging fruit, a lot of the mind-numbing tasks, getting comfortable with that, and then continually, automating and pushing away some of this work, hopefully makes things just more and more efficient and gets better and better over time.
Yeah. AI is obviously a huge theme. We get a lot of hype around it.
Yes.
You've been in the investor side now for long enough to see a hype and bust cycle, maybe more than once.
Once, impressively,
yeah. Tell us where you're sitting with the AI situation. Yeah.
Yeah. Forgepoint, we like to invest more in infrastructure, so the picks and shovels rather than the application layer. So we don't really even look at the application side too much.
Yeah.
And then from an investor standpoint, it's always like a balance between, how big you think something will be versus like what's the price, right? And we do see a lot of money and a lot of hype going into AI. And so I think it's all about just finding the right people and the right application of AI.
Yeah.
So AI has obviously been around for a very long time. A bunch of our companies were already using AI before it became a buzzword and you had to start putting it on your website. However, like now we're taking the approach of, we actually hired somebody from Google to help, lead our AI investment strategy. And so we really like to dive into the tech, and, we actually have a checklist of things that we look for, like, is it solving like a real problem? Is it needed here? Do they have like the data to make it actually unique and proprietary versus are they just using something that anyone else can build? And so if companies go through that checklist and pass everything, then we think they're more interesting. But we've been taking a somewhat cautious approach. We've also split it between AI for security and security for AI. So how are security firms leveraging AI? So like automation of alerts, triaging, et cetera, versus AI security. So actually protecting the AI stack. So we've kind of split that into two buckets and we're going after each one, I guess, separately.
Yeah, I have to say that I've seen a couple of these like hype cycles. I don't know how else to describe it. Maybe hype is good. But I remember back when it was like algorithmic programming, and I think my first natural language processing project was in 2004. A while ago, and I'll give you my 2 cents, which is I think the hype around a company control of some of these tools is where I don't see it. There are so many open source options for us, and so many of the really innovative applications that we build are actually utilizing readily available tool sets from other developers that I love this like solving a problem, because I hate applying technology without understanding why people are going to use it every day in a way. Right. Yeah.
Exactly. Yeah. I think, one thing that happens with these hype cycles, there's a lot of, one of my partners always says there's a lot of FOMO in the venture capital industry. And when you start seeing people get excited about something, you think you're missing out and everyone kind of jumps toward it, which drives a lot of, inefficient behavior, both from the investor standpoint and then also from the entrepreneur standpoint as well. But at the end of the day, it's all about solving real problems. And one other hiccup that we see sometimes happening is people will identify a problem that maybe they had in a very specific role at their job or at a specific enterprise, think that problem is ubiquitous, and it's really not.
Yeah.
So the ability to pivot and find out like, oh, I think I'm solving this problem. Oh, actually, people want this problem to be solved. It's a little bit different, and being able to successfully pivot and adjust, I think, is pretty important as well.
Yeah, I had an investor back in 2020 say, "Oh, the market is really frothy right now," and I was like, "What do they mean by that?" It took me a little while, but finally I figured out is that it looks big, but it's fairly vacuous.
Right. I never even put that together. I've heard the frothy terminology, but I just took it and ran with it.
Yeah, that's really good. I mean, the other thing that you said that I really love is like, do you have the data to build something that is unique? That is the thing. I think we quit saying data science, and I always liked that term better than AI, because it is truly like mining large data sets to create a more efficient prediction or engagement with a human being. Yeah.
Right. And so like, what's going to actually set you apart? Obviously using AI and using data science is great, but really if you've built up decades of proprietary data from either interacting with customers, from internal knowledge or whatever, that's like a leg up that you need to be taking advantage of. So we get excited about things like that.
I have a colleague that works at Akamai, and I was chatting with him one day, and I've always respected Akamai. I think it's a pretty brilliant company. And he was saying, we built all these security tools, and they're quite powerful because we basically monitor 40% of the world's internet traffic. And so they did to me like have the unique data set to understand endpoint protection in a way that almost no one else could. Yeah,
exactly. And a lot of these data gold mines are almost like accidental. It seems like, you're doing a specific operation, and after a while you're like, hey, we actually have something that's pretty unique and proprietary here. So you can go ahead and monetize that. Yeah.
All right, so I want to talk about a hype cycle that is suddenly got the air pulled out from it, and maybe you give us a little bit of post facto. I mean, we saw like the blockchain Web3 crypto thing be everywhere, but then in 6 months, I feel like it just evaporated.
It was fast. Yeah. I mean, yeah, candidly, so I never understood the blockchain well enough to get personally very excited about a specific opportunity.
Yeah.
Um, so it was something where, I was on the periphery, I was looking at it. We have some folks on our team that understand it, much, much better than I do and would get excited about a few concepts. I personally was always like, oh, that sounds interesting. I can kind of get it, but just not enough to really have a lot of conviction here. We ended up not making any investments, partially because of just the pricing and getting everybody up to speed. So with a team that invests by consensus, if half the team doesn't understand what the company does, we're just not going to make an investment. So that's kind of where we sat, and that blockchain cycle was so fast. But we did take a look at a number of blockchain companies, and we looked at blockchain security and smart contracts, and well, I don't think we got to any term sheets, so nothing got too far. But it was definitely something that we leaned into a lot while I was still here.
Yeah, I think and actually, as I read more about it, the fundamental underlying, to your point, like the shovels and picks of the infrastructure is starting to get more interesting to me in a way. Mm-hmm. But we're so used to developing our siloed applications that run in a very lightweight way across, something like the internet that is really just kind of made to transact a little bit of data as opposed to any intelligence around it. I can see where it could be useful, but I think it's just not in the venture capital modality. You need a like-minded set of either individuals or businesses that want to share data in a more rigorous way to decide to participate. And I get why finance look like that, right? Because we want to share data about our coin. Right. There's a space for it, but I think it's a totally different approach.
Yeah, that's an interesting point. And I think there has to be, so one, is there a real problem being solved? And then two, are there enough people out there that want to solve that problem in that way? Yeah. And when you think about kind of sharing data and, being decentralized, we've also spent some time looking at a lot of the privacy enhancing technologies, the federated learning and secure multi-party compute and things where you actually need multiple parties to want to share data. And I think that, a couple years ago when we first looked at the space, it was very early, and I think the technology was getting there, but the attitudes of the customers just was not there yet. We think in that space, customers are starting to get there. So we're starting to see some of the companies that survived actually getting a bit of an uptick, and finding projects that are not just experimental anymore. And then maybe blockchain will be somewhat similar, right? You need the culture of the customer base to catch up with the technology sometimes. So
yeah, maybe the theme here is that the hype cycle is not going to drive a true economic outcome, or at least a lasting one, as much as, to your point and my point, a problem being solved in a broad marketplace that results in revenue.
Exactly. There has to be a problem that people are willing to pay for. And we don't have that, Now in venture capital, we have we can be a little bit early, but we just can't be that early. Yeah. So, Yeah.
I have had I've put more companies to bed, I'm sad to say, than seen a super successful outcome. And one of my life lessons learned in doing that work is is anyone paying to do this today? Because if no one is paying to solve that problem today, I don't know how I'm going to convince them to pay money.
Yeah. I mean, one thing we like to say is sometimes you get a solution looking for a problem, where the solution is excellent. But if no one's, to your point, willing to pay money, or is already paying money either by doing some kind of workaround or throwing bodies at it, where's the money going to come from to drive your own company? And it's always a challenge, especially on the big stage.
Well, what I'm a little curious about maybe you could reveal a little bit about how venture capital organizations are built. Like one of the things that I should have realized, but I've learned over time, is that Forgepoint has a relationship with other investors,
Yep.
and there are funds that y'all build. And I probably should have known more about it before I got into this work, but perhaps you could tell us a little bit about y'all's customers and the relationships that you developed there. Yeah.
Yeah. I mean, so one thing my partners always harp on is it's really easy to deploy capital, right? To just say, oh yeah, we'll give you a check. That's the fun part of the job. But in reality, our customers are our LPs, the people that gave us the money in the first place. And so we have to go raise those funds, then we deploy it, but then we have to get the money back, right? And as the market cycles up and down, sometimes it's easy to get your money back. Sometimes liquidity is high and companies are selling quickly. And then sometimes the market's slow and it's difficult to get that money back. And so your customers are saying, hey, we gave you all this money a couple of years ago. We haven't seen anything. On paper, you're saying this money has grown this big. So can I get it? Like, where is it? And we have to say, oh, we can't get it yet. Or we have to go and try to, sell our companies in order to give their money back. So it's really, it's like a different side of the coin. So I think VC is obviously very well known for investing and putting capital into startups. But on the flip side, getting money back out and returning it to our actual customers at, a multiple of what they gave it to us at is really the name of the game. It's that motion of giving the money back that makes you a good investor, and everything else is kind of a means to an end.
Mm-hmm. Yeah. So, it's your metric, just like the rest of us in a way.
Exactly. Yeah. The IRR metrics, how much money that people gave you, have you paid back so far over time? And we were actually looking at, we did some analysis over the summer, and in venture capital, I think it was between 7 to 10 years before folks were getting like 1x of their return back. So imagine you give money to somebody to invest, and then you wait 7 years before you get just what you gave them first. And then, you get more returns on top of that, hopefully at a nice multiple. But it's really a long-term game. And so the LPs have to really understand, this is a long-term investment. And then venture capitalists have to understand that as well. But at the same time, keep in mind that the money needs to be returned eventually. Yeah. And so, one of the hard things to do in venture capital is when you have a portfolio company that's taking a little bit longer than you anticipated, to get traction, or they're pivoting, which is all fine. But you have to keep in mind, how long has this money from our fund, been out in the market? When will we have to start returning funds? Does it make sense to try to sell the company now, maybe at an exit that's not great, or wait a couple more years for the chance that the company performs how you expected it to, but then there's still more risk in that, in waiting, and you're delaying the money being returned to your original investors, right? So there's a little bit of that at play as well.
It's certainly, I've been very lucky with our board team and the people that have joined. They've been amazing colleagues to work with. Not all of my peers in my role say that. I feel super blessed. And I was chatting with a colleague the other day, and he's like, yeah, great exits don't happen, but for a decade. It takes a decade to build a good business. That resonated with me. I was like, yeah, that's been my experience. It takes a little while. Yeah.
Yeah. And that patience is, it's difficult when you have people banging on the door. And so I feel like, I think entrepreneurs, VCs are always banging on the entrepreneur's door, like, hey, where are the deals? Always trying to drive. But at the same time, LPs are banging on our door, where's the money being returned? When is it being returned? So everyone is always answering to somebody.
Yeah, it's a vicious cycle, right? I have to say, I do love it. I mean, look, there's good pressure and motivation to go and succeed. None of us, our outcomes are all aligned. We all
Yeah,
want a great outcome for the business.
exactly.
And
Exactly.
even, both from a customer level, we're solving a problem for them. We're helping them out. I have a
Yes.
passion for that. From an employee perspective, we're giving opportunity for growth.
Yes.
Usually startups are a place where I grew in my career. Without
Mhm.
them, I wouldn't have been able to take on some of the roles that I have.
Yeah.
And certainly, I love working with investors that like building great businesses.
Yeah.
Yeah.
Totally agree. And I think typically, this isn't always the case, but venture capital tends to draw a lot of people that like working with people. Like I think one of the main differences, at least from when I was getting into the buy side of finance and choosing between venture versus, bigger private equity LBOs, is that you want to work on like more of a personal level. And yeah, we really you want to get attached to, what folks in your portfolio company are building. You want to be able to go to dinners and have a good time after the board meetings, even if things aren't going too well. There's very much of a human relationship element that I think is, one of the more rewarding parts of the job. And, a majority of investments don't work out as you expected, but that's, you have to kind of accept that and not dehumanize it just because things aren't, working out as well as you had hoped. So there's always that.
To that, putting companies to bed, I'm amazed at the issues that cropped up, that we never could have predicted in a way.
Yeah, not easy.
But speaking of predictions, and 10-year lifespans, as you guys, what do you see changing in technology broadly that may impact where your interests are in investment that 10 years from now you think are big themes that we're going to deal with?
One thing that I think is getting more and more traction now is kind of things being pushed more to the edge. And so we've made investments in Kubernetes companies where folks are getting a little bit further out to the customer. One of our more recent investments last year, a big greenfield opportunity for them was enabling people to run complex applications in constrained environments at the edge. AI at the edge, I think, is becoming more and more of a thing. And so I think that broadly, the edge market, while it's starting to pick up a little bit of steam, will be a much bigger market 10 years from now than it is today.
That's like full circle from the Akamai discussion, right? Like,
there you go. Right.
I had a project in 97 where we used Akamai to push a video that was really hyped. It was a 60 minutes thing and it was really weird. But anyways, everybody wanted to see it. We couldn't get enough network bandwidth to get it out. And we used Akamai to push it all to the edge. Yeah.
There you go. I think that's just going to continue to grow. Like people's opinions of like what's acceptable from a latency standpoint, from a personalization standpoint, like just comparing now to 10 years ago of what you would accept as a consumer and customer is drastically different. And I just think 10 years, 15 years from now, it's going to be hard to imagine like all of the personalization and low latency things that need to happen immediately at any customer or any personal device, etc. It's going to be pretty mind blowing. And the infrastructure to support that needs to continuously be built out.
It's interesting because to me, it's in tension to some of the things that have been discussed about massive data center development as opposed to more ubiquitous computing environments. Like, should we build another massive data center or should we empower, smaller and smaller devices to host these type of things? And there's a security risk in that, right?
Yes.
Logical access gets thrown out the door in a way. Yeah.
Yes, exactly. Which is kind of where we see that, continuing convergence of infrastructure and cybersecurity, because layering on cybersecurity in a kind of a more traditional way that you can do, in the cloud at the edge is quite difficult. So it's a kind of a different paradigm. So we think the approach will have to be a little bit different. You have a lot more security by design. So it's going to be a completely new market than I think what traditional cybersecurity companies are covering today.
Yeah. Well, I couldn't help but also ask, you talk to a lot of founders. Most of them are looking for capital. Things have changed a little bit since 2021. The power differential has shifted in a way. Maybe you guys breathed a little. Yeah. What are some of your recommendations for founders that are interested in building businesses?
It's a really good question. Well, one, having that flexibility. In order to have the gumption to start a business, you have to be, pretty stubborn, which I think is a good thing, right? You have to really believe in what you're doing, but then you have to be willing to pivot based on what customers are telling you, and really willing to listen and get that feedback. So I would say that's one. Another is, really being able to try to find the right investor. I think you can probably cut down some of the conversations and some of the heartache if you are more familiar or a little bit selective with what investor you're looking for and why. So some people want someone that's going to be more hands-on, and some people want someone that's going to be a little bit more hands-off. Knowing that somebody is a Series B, Series C investor, but you're really a seed stage company, that's helpful knowledge to go in. I'm not saying not to have these conversations and build these relationships, but these are all things I need to keep in mind. So I would recommend that as well. And then lastly, at least this may be a Forgepoint bias, but the customer feedback that you're getting about your product, I think is, we hold that to super high esteem. And so while you can spend a lot of time saying, oh, the market is this big and describing the problem, describing it the clever way that you're approaching it, which is great. The more feedback that you can get and demonstrate to investors, I think, the better off you'll be. So really focusing on that element and prioritizing that over maybe some of the other more market sizing, pieces that typically end up in pitch decks, I think is helpful. I'm always asking for customer stories and case studies and, things that can really paint the picture from a customer standpoint. What's the problem? How was I solving it before? How will I solve it using this new product? Why is that better? It just makes it really easy for venture capitalists that don't have technical backgrounds to really grasp what you're doing and why.
Yeah. I certainly think that's the crux point of success or failure in a business, whether you take on investment or not, right?
Yeah.
Do you have a customer? Are they able to talk about the problem that you solved? Are you able to repeat that solution over and over again? And certainly you all look for that solution being repeated at the highest efficiency.
Yes. And I think where we typically invest around Series A, I think is when folks have, they have a handful of customers. They've seen kind of a semblance of repeatability, but they haven't harnessed it yet. And I think that's where we try to add the most value. And it's really figuring out who exactly is your ideal customer profile? What is the exact budget that you're going after? What are the things that you need to see to say, okay, this customer, we're going to knock it out the park with this customer and we're going to stamp it and repeat it. And it's really hard to do. Being an early stage company, when maybe you're selling through some relationships, maybe you're bending over backwards to get into a company here or there, and you look at your customer base and you're like, oh, I'm not really seeing the pattern here that, will enable me to just stamp this out. But I think it's not until you have that repeatability, until you see that repeatability, investing a lot in sales and marketing, a lot of times is pretty detrimental to the business. And so things that I've seen is you get a good customer base, you're selling, things look like they're going really well. You get venture capital money. Venture capitalists are like, yeah, sell more. And you're like, sure, hire people. And then you realize that there's only 3 people in the company that can really sell the product because each person is selling it in a slightly different way to a slightly different customer. And it's not really until you figure out exactly what that repeatable motion is. And that's when you can pour gasoline on the sales and marketing and really accelerate in an efficient way. But easier said than done, right? So,
yeah, it's fun to say it though.
really fun to say.
I had a really good piece of advice provided me once, where they were like, your most average salesperson should be able to close your most average deal on any average day. And if that's working, then you're ready.
I like that. That's exactly. You shouldn't need a guru to have to sell your product, right? So that's where we're trying to get to, at least.
Yeah, absolutely. Well, Ray, I think this has been a tremendous conversation, and I'm super grateful. I have to say that the Forgepoint team, my interactions with y'all have been exceptional. And awesome. One of the ways in which that I've found great investors is our very first investor and board member was just an amazing person that I really liked. And they made introductions to people that they liked. And I found that in that way, we built a network of really like-minded, high collaborative. I like a high-touch investor, actually. I like people that like to get their hands dirty with me. I feel like they're emotionally engaged when they spend time. And so you can see how I build teams. And so, if I were thinking about this, it's like you can build on top of a win with a great relationship, because they will have built a network as well. Yeah.
Yes. And every touch point is always so important, because you never know what that touch point will grow into, whether it be their network or, whatever it may be, lifelong friend, etc.
All right. Well, I know you guys hang out at RSA. I see you there once a year. So hopefully we'll get a chance to shake hands. But thank you so much for joining the podcast today, Ray.
Of course. Thank you. Had a great time.